Good morning and welcome to the Zinc Media Group PLC final results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged to be submitted at any time via the Q&A tab situated just on the right-hand corner of your screen. Please just simply type in your questions at any time and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. And I'll now like to hand over to Mark Browning, CEO from Zinc Media Group. Good morning.
Good morning. Thank you, Zach. Good morning, everyone. So yes, I'm Mark Browning. I'm the CEO of Zinc, joined today by Will. Many of you will have met us previously, but for those who are joining perhaps for the first time today, a little bit about me. I've been in content creating companies, running content creating companies for the last 25 years or so, typically taking struggling businesses and turning them into high-performing growth companies. First as the content director of Heart, which was a radio station in those days and is now the big radio group across the UK. And then in television as the group managing director of ITN, which Will and I joined up at that point, and we took from a loss-making business to a high-performing, profitable company over a 9 or 10-year period. So where Will and I are back in Zinc, we see the issues Zinc has faced, similar to the ones we inherited when we joined ITN at the start of our 10-year journey. And we're here to turn around Zinc. The turnaround is well underway. And we're here because of the value creating opportunity along with investors and our teams. So we have fixed Zinc's historical problems over the last couple of years. And now we are in the phase of investing for accelerated growth in this year and future years. So a little bit about the company. How we structure the company. It is a pure play content creation group. We don't own other platforms. We make compelling content across all sorts of different genres, and one of a very small number of public listed companies that are in the pure play content space. It's a 20 to 30 million pound group in its current form. And it's diversified across 10 or 11 revenue streams. It's anchored in television. So Zinc TV is about 80% of our turnover, and Zinc Communicate, which creates televisual content for brands, agencies, rights owners and publishers, is the other 20%, roughly. The primary difference between Zinc TV and Zinc Communicate is the buyer. So in TV, we will pitch and win business under labels, which you can see on the title slide in front of you. They help our customers navigate the different types of television we make, whether it be in turn or brook-lapping or Super Collider or Red Source. In Zinc Communicate, we sell 4 products: digital content creation, branded entertainment, corporate films, and audio in podcasting and radio. So we've been here 3 years. We've done the transformation of fixing the company, transformed the group's margins and taken it into new markets. So 6 of the businesses on the screen in front of you are new in the last 18 months. And they have generated about a third of the revenue we're reporting for 2021. And crucially, the 2 parts, Zinc TV and Zinc Communicate, support each other reputationally and commercially, but also operationally in how the workflows work. They sit on the same workflows, the same spine, they share the same customers, the same propositions, and that is really important to understand. It's what we've built in the last 3 years because that is the key to unlocking scale. We can now scale the business because we have the core infrastructure in place to do so. At the start of 2021, we updated our strategic priorities. They are the critical KPIs that we talk about internally, that we recruit against, that we report externally against, and they are revenue growth and the diversification of revenue, TV production gross margins, cash management, cash generation, the culture, the performance culture that we have across our businesses, and shareholder comms. So everything we're doing now, we will report against and structure against those 5 strategic priorities. So the key headlines for 2021 and now into 2022. Revenue growth grew We grew in 2021 and we will grow again in 2022. We are on a growth trajectory. The rate of new business winning this year is up on where we were winning business last year, the sort of run rate. We've booked £4 million of new business since we last updated everybody in February. That is a good run rate for us. The pipeline is good, with around 8 million ready to be contracted. So we've got 13 million that's due to fall this year. We have a much bigger pipeline that we're not talking about. We're talking about revenue that's for this year. We've got 13 million booked and 8 million at a contracting stage. So we're confident of revenue growth. And the diversification is going well, with our newest businesses booking good new revenue and Zinc Communicate showing it has the potential to double in size for every few years in our years ahead. On the margin side, we've done better than we had hoped and expected and guided before. If you recall, in 2020, I said publicly I hoped to get the margins in television production up 6% from 24 to around 30. 24 is what we inherited when we joined, and then last year, now reporting they're up 12.5% since that period in 2019, early 2020, which is a huge swing to the underlying opportunity for profit in the business. The culture is good. We have a high performance culture. We measure success across both creative ambition, commercial ambition, and our cultural objectives internally. Half of our employees have joined us in the last 12 months. So while the name of the company is the same, it is a rapidly renewing business, with 50% of people who work here today new in the last 12 months. So it's a completely different organization to the one you might be familiar with, and it is in a growth trajectory. In terms of shareholder comms, we put this out, shareholder communications, we put this out as a key strategic objective for 2021. And I hope that you now think that this company talks and is recognizable and presents as a grown-up, mature organization following recognizable investor relations objectives. So lots of shareholder comms are now happening, regular RNSs, these sorts of meetings, capital market days, and so forth. And we appointed IFC Financial to help us with our investor relations and our comms at the back end of last year. So all of this progress has helped to drive our share price performance, which is finally catching up with the story, but there is an awful lot of headroom to go. So in terms of some of the results for last year, I'll let Will jump in at this point and take us forward on this slide.
Okay, so results for 2021. So we generated revenue of 17.5 million. And by way of comparison to pre-COVID 2019 revenues, they were 29 million. And that's just a useful kind of backdrop, which really says that's where we initially need to get to scaling back to. In 21, we posted a full year EBITDA loss of 0.6 million, but it really was a tale of two halves of the year. So first half of the year was heavily COVID impacted, with 4 months of lockdown, January to April, and that had a big negative impact on TV production. We're really reliant on access to people to go and film. So that impacted on our first half results, which were loss-making. But crucially, in that first half, we continued to invest in new business winning hires with the expectation that that investment would bear fruit in the second half of the year. And bear fruit it did. So second half of the year, we saw revenues increase by 50% to 10.5 million versus the first half. And we generated an EBITDA profit of 500,000 and free cash flow of 500,000. Gross margins across the whole year were up across the group from 30% to 38.5%. And they were driven by the London and Manchester TV margins. And that enabled that division, which is our biggest division, to be profitable for the first time since 2017. And as we go on to the margin story, you see on the left-hand side of this chart, over 2 years, total gross margins across the group have risen from 25 to 38%. As I say, they've been driven by the London and Manchester TV production gross margins, which you can see on the right-hand side, rising from just under 25% in 2019 to to 37% in 2021. And those we've talked about before, but the main driver of that was the investment that we made in post-production kit. We improved our workflows, and we've managed to keep a lot of the spend on TV production in-house rather than having to go out of house for that. And that, based on 2019 revenues, would be equivalent to a £2 million improvement in profitability. So it really talks to the opportunity when we scale the group further.
Okay, so let's talk a bit about revenue diversification. It's been a key strategic priority for us, and there were many good firsts in 2021. The first commission from Discovery Group, it was something I said, I think this time last year, we wanted to break into. And the really encouraging thing for me is not only that we diversified well in 2021, but we're now in conversations with Discovery about continuing their spend in 2022. The same is for UK TV. First time we'd won a series commission from that group, and we're in conversations about the second series. Sky Arts never spent with Zinc before, and we're in conversations with Sky and the Adobe partner that we have for that advertiser-funded series about the next series. And the same with London Pride, who sponsored our podcast series for the Six Nations. So the first four of those, all brand new, all good in 2021, but really encouragingly, we're talking about the next opportunities for 2022 and 2023. We've got our first Amazon Audible commission in 2021. We are underway and being paid in a development phase with one of the big global SVODs. And we've got our first brand work in 2021. And again, conversations are continuing about opportunities for this year, and the same with Channel 5. So we don't just want to break into new markets. We want to break into new markets and then build in those markets. And we are doing that with all of these opportunities that we've announced in 2021 for this year and for next year. In terms of the new businesses, we need both the diversification, but of course the diversification also allows the growth opportunity to expand. Our new businesses, which were launched in COVID, really, are performing very well. These are businesses launched in the late 2020 and 2021, and collectively they booked into last year 5 million of revenue, so about 30% of the turnover. They've booked more than that because they're still booking into this year, but it gives an illustration of businesses that we can launch and how fast they can grow. And there's no reason why these businesses can't continue to be expanded, and we want to make more incremental investments. So this is a good illustration of the organic growth story that we intend to deliver over the coming years. Modest hundreds of thousands of pounds of investment can deliver decent seven-figure sums over an 18-month period. Some will grow faster, some will grow slower, but we want to be making those sorts of investments this year again and next year, and letting the cumulative impact of this expansion really drive organic growth over the years ahead. So it is feasible for us to invest £500,000 in a year and see 3, 4, 5 million quid the following 18 months to 2 years. And if we can do that over the next 2 or 3 years, we're on a very exciting organic growth journey. New talent. I'm very aware that some of our historical investors may not recognise some of the new talent we've brought in. And we are investing ahead of the revenue and ahead of the profitability, quite deliberately, on bringing lots of new talent into our group. So in the centre of the picture is Tanya Shaw, joined from Shine, at the MD of Shine for the last 6 or 7 years. Shine make MasterChef. She was also a commissioning editor at Channel 4 and a programme editor at BBC as well. So lots of good industry relationships, a big player that has joined Zinc because she also believes in the story that we all believe in and the growth opportunity. Mike Christie, another one, as you look at the screen top right. One of the directors who helped produce the opening ceremony of London 2012, has also worked with Apple, has worked with Netflix, works across outdoor and events and live television, very new spaces for Zinc, was the architect behind our Red Bull and our Lego wins, launched Super Collider less than a year ago, that is already booking new business into Zinc. Don de Turville, bottom left-hand corner, is the architect behind the AFP project that happened last year. Tom Edwards, bottom right-hand corner, the architect behind the vast improvement in our relationship with Channel 5 and our biggest ever commission from them. And then top left, Lana, who's just joined us as a program maker from series like SAS, Who Dares Wins, and others, taking us into a more entertainment-driven, factual entertainment-driven space. All of these hires, or certainly 4 of the 5, are in the last 12 months. They have booked revenue already. These are investments last year and this year that will play out next year and the year after. In terms of our TV business, it's a very different looking television company than we had in 2019. Just some of the labels in front of you. The heritage of Zinc, we're still proud of, and we still make good, award-winning, serious television, the likes of what Brooke Lapping does for ITV with their Masthead 9/11 documentary. But now we've broadened the business into popular factual with Red Source, into the nations in Northern Ireland and Scotland with Turn, into new markets with brands and advertisers with Super Collider, and we've just launched Rex in the last month. So it's a very modern, very different looking set of television labels that we now trade on in TV. In Zinc Communicate, this is the commercial content production division of Zinc, where we produce in these 4 areas of branded entertainment, audio, building on our heritage in radio, but moving into the new world of podcasting, corporate films, and digital publishing. And it's a critical part of the group. The 2 bars, okay, it's a small start, but again, this is good illustration of organic investment. Modest hundreds of thousands of pounds, we can grow businesses to the millions of pounds. In our previous life, we started a business in this space from nothing and grew it to 12 million over our 10-year tenure. We're 18 months in. 1.5 to 3, 3 to 4 plus, maybe 5. That would be a great trajectory. This business, the whole of the Zinc Communicate side, can definitely grow at rapid pace over the next 2 or 3 years, and we expect it to. And it delivers margins that are typically twice what TV is. So it doesn't have to get big to make a big impact in time on the bottom line, but we're investing ahead of that growth at the moment. To the pipeline. So this is the 13 million that is currently booked to deliver into our accounts this year. And then we have this further 8 that is highly advanced that could also and should also deliver into this year. And then there's a whole load of other revenue that could too, but it's in earlier conversations. Now, it'd be lovely if it all smoothly flowed up the pipeline as it does. Of course, it doesn't. It comes in leaps and bounds and bumpiness, and that is the nature of the size and scale of business we are at the moment. But as I sit here, I am confident of growth this year. How much growth? Still unclear at this stage, but good growth, and that pipeline supports that narrative. So, a few of our program highlights. This plays back to what I just said about our labels. Let's look at some of the TV production highlights. So Zinc has always had fantastic reputation for big, important television programs. So in the likes of the BBC's annual report or ITV's annual report or Channel 4's annual report, you'll often see a Zinc program as one of their big reputational moments. That might be Ian Wright's amazing documentary, which was picked up everywhere, but it was a single one-off. It might be ITV's big project for 9/11 or the BBC's for Trump. You will see a lot of our clients hang their reputation off that quality program making from Zinc. But it's not enough to drive a business profitably. We also need good, regular, returnable series. So let's look at the other series we made in 2021. You'll note on here that these are big volume series. Bargain Loving Brits in the Sun for Channel 5, 40 hours. Emergency Helimedics, it's in its 5th season for Channel 4, another 10 hours. And then a new talent-led series for BBC Scotland. This is just 3 of 13 big returning series that we had last year and going into this year. It's that balance between reputation and revenue growth that we need to get in the new world, and we are getting, and we're seeing signs of it in our results for last year. And then you layer on top of that brand entertainment work. This is brand new Zinc. The Human Pinball Show for Red Bull. Premium TV budget, but distributed on social and on Red Bull TV. My Greatest Shot for Sky started in Zinc Communicate with an idea with a brand and an agency. It was paired with an idea we have in one of our television businesses, and once commissioned by the channel, was made by Turn in Scotland. I think that's an excellent example of the new Zinc opening up in new markets because it's working as one cohesive unit. And then the Lego City Stunts campaign. Very simple idea. Kids build highly imaginative Lego models using this new range of toys, and we turn it into real life. And we supply the marketing assets and distribute it socially and experientially in places like the Arndale Centre in Manchester or Westfield in London. And it's a good illustration of why a brand, an agency would come to New Zinc because of its credibility in television, its new talent that we've brought in the last few years, and it opens up a brand new market for us in television content that's for an advertiser. So here's a little clip of that Lego City campaign.
We are Bulldog FMX and we are a freestyle motocross team. We've been brought here by the Lego Group to recreate some stunts that have been inspired by kids using the Lego City range. Ready? Oh wow.
Yo, that looks a bit fun, that. Yo, good luck, boys.
Wow.
So sick.
That definitely is big. Oh, look at that. Yeah! Ooh. That looks like there's 4 bikes.
Yeah!
They must be cool. Even my kids think I now do something vaguely cool. And they use language I don't understand. So, to the next highlight of the year, audio. And again, this is a good illustration for me of where old Zinc meets new Zinc. So Zinc has always had a fantastic reputation in radio production, typically for BBC4, World Service, but now into podcasting. Both commissioned podcasting from Amazon and advertiser-funded podcasting. So Fuller's London Pride sponsored our podcast, hosted by Lawrence Delalio on the Six Nations. It's a perfect illustration of New Zinc building on the heritage and reputation of the company we inherited 3 years ago. A little bit on the market. Now, I really would invite you to one of our capital markets days because we go into much more detail on this sort of information and we show a lot of content. And you'll get a full range of our TV and Zinc Communicate production on our capital markets days. But just 2 slides that summarize a little bit of what's going on in the marketplace. So we commissioned this bespoke research at the back end of last year to really help us refine our strategy in TV. Total spend on original commissioning from the UK in 2019, so this is pre-COVID, was just under 5 billion. That's spend in the UK on original content commissioning in television. Now that includes dramas and sport, which is a massive spend, entertainment, so the Strictlys and Voice, X Factors and so forth, news and current affairs, and factual. Zinc is currently in the factual space, which is about 20% of the market, so about 1 billion. Of that, the largest spenders remain the PSBs, public service broadcasters, BBC, ITV, Channel 4, Channel 5, and the nations and the regions where we have Turn TV in Scotland and Northern Ireland. Then it's international, typically the big US channels, then the multi-channel networks, the 3rd largest spender of original content, previously untapped. Previously, Zinc companies didn't operate in that market at all. And then the SVODs, small number of commissions at the moment from a small number of indies. So it gives you a sense of the size of the market in factual where we reside. So the question then is, what are we doing about those 4 areas, those 4 buyers. With the PSBs, we've refined our strategy, refocused on the BBC, and really had to think about daytime and long-running series. And I would give you the case study of our win we announced, I think it was in February, for the new BBC One show on Sunday mornings, which will follow the old Andrew Marr show. It's called Sunday Morning Live. It takes us into a new space of regular live topical programming. It comes from Turn TV and a partner called Green Ink in Northern Ireland. And is a real moment for us as we get long-term visibility, because the nice thing about these public tenders and when you win these contracts is that they're multi-year. And shows like this can run for years and years and years. Getting them is hard. We made it a strategic priority, and we've delivered on that in this most recent announcements. Channel 4 remains a priority. We underperform against the Channel 4 spend in the market. So Tanya comes to us having worked at Channel 4. Lana has made lots of Channel 4 programs. So I'm confident that our capabilities have improved there, and we're doing well with Channel 5. The international market, second biggest, very strong for Zinc prior to COVID, about 30% of TV turnover, but all but dried up in COVID as we couldn't go anywhere, and the whole globe obviously shut down in content terms. So the strategy is to build back. I feel we've got the right people, and as that market opens up this year and next, we should expect to see our revenues recover. So during COVID, we prioritised the UK multi-channels because it was a market we weren't in, but it was a market we could break into during COVID. And we've done it. So first ever Discovery Group commission for Really, first ever UK TV commission for Dave, and first ever commission for Sky Arts, and all capable of returning. And then there's the SVODs. Not been in this market in any of the big players, some of the smaller players, like Love Nature, but not the big players. So we are, actively engaged and in development with one of the big players and talking to all the big players. And then there's the market outside television, the Zinc Communicate content market, the one for Red Bull, one for Lego, one for Sky, and for Adobe. And we're exploring opportunities to expand there through both organic growth and acquisition growth. So what's our future look like? What's the investment case? This is an illustration, this slide. We'll talk in a minute about forecasts and where we are on our journey there, but this is an illustration of the importance of scale. We are very small at the moment. So Will and I have very few levers to pull if the wind blows against us for a month or two or longer. And our experience of ITN tells us that we need to get back to that 30 million plus, and then we need to get 50 plus. Because then we have many more levers to pull to iron out the natural peaks and troughs of what is always a fairly bumpy commissioning cycle in television. Zinc Communicate is part of that. That will help. Revenue diversification is part of that, but it's really now going to be all about scale. So in the short term, we need to get back to the 30 million mark, and we're investing ahead of that now. And we need to scale towards 50 and then towards 70. And you can see just from the illustration that the benefit on EBITDA and cash flow, when you get to that sort of scale, really starts to kick in. And scale will come from organic growth, of which I hope I've given you evidence that it's working, and we intend to do more, and acquisition growth. We need to do both of those in the years ahead, and we are actively involved in conversations about both of them. Our market cap is part of our toolkit that will help us to do both of these things. And our share price has started to normalize at around 1 times turnover. It started to respond with the story that we've been telling over the last 2 or 3 years. Liquidity clearly remains one of our challenges, but there is significant headroom opportunity for investors, and us included, to see the value creation opportunity. Because if you look at our share price over the last 5 or 10 years, you'll see 2 things. One, a fairly depressing graph, and if you're an optimist, lots of opportunity. And I'll just say it publicly because it's in our accounts last year and the year before. I have personally invested nearly £120,000 of my money into this organisation, along with other directors. It's a significant amount. I think it's the most of any of the previous CEOs here, because I believe that's what we're here for, and that's one of our opportunities. So obviously that's outside of stock options and share options and so forth. So there's a good story ahead. The shareholder register is really strong for a business of our size. It's got some really well-respected heavyweight institutional investors, all of whom have supported the journey over the last 3 years. And they want to see the scale and the progress continue over the next 3 to 5 and beyond. So what I find fascinating about the conversations we have is they are very, very supportive. They are able to back our growth trajectory and the investments we need to make. And their horizon, the question they ask me is, where are you going to be in 3 and 5 years? Interested in the short term, but more interested in the 3 to 5 year story. And there are lots of new investors who are following Zinc and who will be joining Zinc in the years ahead. So we are in a good place to be able to work as a team, all aligned, investors, management, and our employees and our clients, to grow the content story through Zinc. So what does the next 12 months look like? Well, I would say this is the sort of good summary. Year-on-year growth in revenue. The pipeline gives us the confidence for that. Continued diversification. We are targeting these new channels, we're targeting new brands and new markets, and also repeat business from those we broke in with last year, in the last year or 18 months. Hoping to see international TV return too. We don't need to change anything our side to anticipate that and to respond to that. So that should open up as the rest of the world comes through in content creating requirements. Double-digit growth in Zinc Communicate is on the cards. All 4 of the businesses we're in have the capacity to accelerate. They won't all accelerate. Some will go faster than others, and we'll adapt our investment according to the opportunity, but I'd expect double-digit growth in Zinc Communicate. We're going to make more hires. We've announced 1 with Lana and Rex. We've got more in the pipeline. And then it's drive for scale. So scale, and scale are on our minds in the year ahead. More organic investment, and where we see opportunity, acquisition as well, to get this group to the level that we all want it to be, the share price the same, the investment and return. And again, just to give a bit of feedback from our current investors have said this week, it's just invest for the growth, invest for the future. That's the mantra we're on as we go through this year. So that's our story. Let's open up and see where the conversation takes us.
That's perfect. Thank you very much for your presentation today. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab just situated in the top right-hand corner of your screen. But just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via our investor dashboard. Mark, Will, as you can see, we received a number of pre-submitted questions from investors, and I wanted to start off the Q&A with these. The first one reads as follows. Why do you think your share price has risen in recent months, given there isn't a forecast in the market?
Because I think the market evidence is this, that we're communicating our story consistently, clearly, via all the tools available to us. And I do urge you to follow our website and our social feeds, but via RNS, via these IMC meetings, and via singers and other brokers. And via IFC, who we've appointed to help tell our story as well. So I think the story is good. I think it's clear and now evidenced, increasingly evidenced. But also we've worked very hard with our brokers and our market makers to keep them aware of where we're going and what we're doing. And the spread was too wide. Volumes are still low. I have had investors complaining that they haven't been able to place 10k or 30k or 50k, and people wanting to. So we've addressed some of that with some larger volumes. We've addressed the spread issue. That is helping. So it's all of these tools. On the issue of no forecast, the thing with I think there's enough evidence and information in the market to make a well-informed choice about the investable opportunity with Zinc and the journey it's on. And arguably, actually, our share price growth vindicates that there's enough evidence for that. We want to put a forecast out because there are some investors who, without one, they simply can't invest in Zinc, even though they are minded to. So that is about timing. And there are 2 things playing on my mind. One is the scale we're currently at. I'll feel much more confident with another 5 million, another 10 million, when we're getting back to the sort of levels that we were prior to COVID. It's still small at 30 million. You have very few levers. At the moment, we've got virtually none. If at a 20, 25 million level, a few things blow against us, a forecast can be blown away too easily. And that would undo quite a lot of the hard work. The other is our clients. And actually, even if we manage that issue, the clients, I've got a couple of clients who said to me that they were expecting to start business with us in January and they've delayed it till May. And they're international clients, actually, because they're still not out of COVID in the way that perhaps the UK is. So until that starts to get better, which could be only a matter of months away, but it could take longer, I think I don't see the need to get too ahead of ourselves here. We know the direction of travel we're on. We've evidenced it. Share price has caught up with the story, and most investors have got enough confidence in where this business is going with that one. But we want to do one.
That's perfect. We've got another one here that relates to COVID and reads as follows. Is COVID still impacting you at all, or do you think the market is returning back to normal?
It's returning back to normal, and it's still impacting us. So both of those things are true. Current productions we book revenue based on making the programs, based on activity. And current productions still get delayed by a couple of weeks, sometimes longer, sometimes a couple of months, because too many of the crew go down with COVID, or the director goes down with COVID, or the commissioner can't view the cuts, so they're not around for a couple of weeks. We had 4 of our business winning team, off in the last quarter. 2 commissioners are currently off, so can't deliver back the feedback that we need. So productions can get delayed. Now that's going to be the case for a while. It's no different for us for anybody else. We just got to manage it. The difference is we're still relatively small, so small impacts make a big difference. And the international market is the challenge. Until the US and the Far East really get more confident, some of our international business is going to continue to be sluggish. And it was 30% of our turnover prior to COVID. So I'm not complaining about it. There's plenty we can be getting on with, plenty of diversification, plenty of growth. But yeah, it's still an issue operationally and in the market. But it's getting less with every month. So we'll be out the woods by the end of the year.
That's perfect. We have another one here relating to Channel 4 and reads as follows. What do you think the impact of Channels 4 privatisation will be on Zinc?
We'll know an awful lot by the end of today, which is coincidental in timing. So if you don't know, there's a white paper. The government are publishing their white paper on the future of media and broadcasting in this country. So it contains a lot more than Channel 4's privatisation. That is out. It's been well leaked overnight. So you can read about both Channel 4 and the implications for the BBC and other PSBs. So I see opportunity. Mostly there is some risk. But I think for Zinc companies, more opportunity than risk. One of the crucial elements is going to be the remit and the regulation that comes with any new privatisation of Channel 4. They currently commission all of their programmes from the open market. And in order for privatisation to happen, there will have to be some degree of in-house production. Now, they're talking about up to 75%, which might at first reading freak everybody out. But actually, that's no different to what is currently allowed by ITV and by Channel 5 anyway. So from Zinc's perspective, if Channel 4 becomes more aligned with Channel 5 and with ITV, given where we are and our growth opportunities and our small share, I mean, we do more business with Channel 5 than Channel 4. So maybe that's what we should take from this. If we can do that with Channel 5 and they've got the same ownership structure and they're privately owned and they've got the same regulatory requirements, Channel 4 is a growth opportunity for us.
Thank you. We have another one here about Netflix recent issues, and it reads as follows. What's the likely impact on Zinc of Netflix recent issues with declining subscribers?
Well, if their subscribers are declining, they're going to have to do 2 things, in my view. They're probably going to look at some of their commercial model and go, do they need to find other ways of allowing customers to join the Netflix story? At the moment, it's subscription, and they're talking about whether they need to modify that, i.e. offer a cheaper subscription with a degree of advertiser funding as well. So they'll probably look at that. They need to be able to grow their subscriber base. From program making point of view, content is their differentiator. content is what they lure you and I with as viewers. So they're going to need more original content. And what they're increasingly doing is making that market specific. So they're going to need more content, original content, for the UK and Europe markets. So I believe, opportunity for a company like Zinc that is a pure play content creator, because companies like Netflix need to differentiate through content, and we are a pure play content creator.
Thank you. We have another one here about an article on Master Investor, and it reads as follows. I've read an article on Master Investor about Zinc, which mentioned the significant tax losses Zinc had accumulated over the years. Can you tell us how much these are?
Will can.
Yeah, so we've got it's around 25 million of tax losses. So therefore we've got a significant tax asset, which is about 5 million, and that's not reflected on the group's balance sheet.
Thank you. Moving on to the next one that reads as follows. On your current cost basis, how scalable is the company?
Okay, well, I'll take this one. So I think the great thing about Zinc's business model is that once you've got the core infrastructure, the edit suites, production kit, back office services in place, which we now do, the business can easily be scaled. So investing in business winning resource can deliver significant revenue and gross profit without actually adding a significant amount of overheads. And that's because the majority of our costs are variable. So when we go and produce a TV show, a lot of that resource, a lot of the costs are for external costs. They're freelancers in particular. And that means that we can scale from 20 million revenue to 30 million and beyond by investing modestly and by taking less risk, arguably, than in other industries. And I'd say the only kind of constraint to how fast we can scale in this way is availability of cash. The investments to scale typically take 1-2 years to be profitable. And of course, hiring new business winners, not all of those are going to come off. So we need a portfolio approach to kind of placing sufficient investments in the right areas. But that's absolutely what we are doing and are looking to do more of, as well, of course, as looking at potential acquisitions along the way.
Yeah, and I just add that we have the means to do it now. We've got good balance sheet, good cash reserves, so we're looking at these things as we speak.
Thank you. I know you've touched on this question already, but this one reads as follows. I've tried to buy Zinc shares in the last 6 months and cannot get hold of any decent volume. Why is this?
Well, it's the byproduct of our very strong, supportive shareholder base who aren't looking to sell because they, like me, believe the future is good. So there's not a lot of volume, certainly to buy in at the sort of decent levels, 50, 100 grand kind of levels. But we know a lot of investors are watching. I find it very helpful when investors contact me if they're struggling, because it gives me a sense of what's going on in the market. So I do like investors to contact me when they've got issues like this coming up, and then we can engage the conversation and try and make all parties work to drive the share price up. Liquidity will always be a challenge at the moment, but it's getting better, and we have a plan to make it get better in the future, working with all our partners, including our largest shareholders.
Thank you. Moving on, we have a question relating to margins, and this reads as follows. Your gross margin improvements have been very impressive. Are you expecting to maintain margins at this level going forward?
I'll take that one. I think it also relates to the question that has come through. Maybe it's disappeared. There's another one on margins. So the answer is that overall, we expect to maintain gross margins at around the current levels over the medium term. We would expect them to reduce slightly in the short term. And there are kind of 3 main elements that are impacting margins. You've got the underlying TV production margins, which you've talked about, particularly in London TV. They were 37% in 2021, which are well above industry average. And we'd expect them to come down a little going forwards as we move into new markets, albeit we'd expect them to still remain above the industry average. So we expect them to be in the 33 to 35% range. Secondly, we may decide to produce some TV shows at a lower margin in order to get into new areas, which will help to scale the business in the long term. And an example of that is this Sunday Morning Live production that Mark mentioned earlier, where we're partnering with another company to get into this live space. But in order to win a multi-million-pound contract over 2 years, and that'll allow us to tender for more contracts of a similar ilk going forward. And the third element to margins is the Zinc Communicate business, which we're expecting to grow significantly in the coming years. And crucially, its margins are typically a lot higher than in TV. So the blend of those three elements together means that as we scale, probably expect a little softening of the margins over the next year or two, but we would expect them to settle back at around the current margins overall over the medium term.
Thank you. And following on the topic of margins, there's another one that reads as follows. Given the gross margins are excellent, why is the EBITDA not higher?
Shall I do that one? The answer simply is that we are in an investing for growth phase. We're not managing at the moment for maximum profit. I think there are, I mean, I talk internally here and with our board around 3 stages of a sort of business life cycle. You can have a managing for growth phase, a managing for profit phase, and manage decline. And you can have all 3 actually at the same time. They're not mutually exclusive to each other. Across a portfolio group, all 3 can be happening in different parts of the group at any one time. I think most businesses in most sectors have been in a managed decline cycle for 2 years because of COVID. So everyone's been going, well, we know our business is going to shrink a bit. How do we manage for that, but keep an eye on the growth opportunity as it comes back? So you're constantly wrestling with these 3 areas. In that sort of managed decline cycle, you're going to cut costs, you're going to streamline your portfolio, all the things that we did. But then you need to look at your investments depending on the cycle of coming out of that. So we're now in the managing for growth phase for the vast majority of our businesses, looking at a 3 to 5 year horizon. We could have cut our costs more in the first half of last year, closer to where we did in the first half of 2020, but we didn't. So the losses were higher, but that was a calculated decision, both for the second half of last year, for this year, and for next year. Because we saw growth in H2, which vindicates the decision, we'll see growth this year, and we want to keep that 3 to 5 year horizon on our minds. So the reason that we're not we could have delivered a bigger EBITDA number, but we're trying to build this business because actually it's about scale. Everything comes back to that message of scale. This year, next year, and the year beyond, we need to get this business scaling so we can really leverage the opportunity.
Thank you very much. That concludes the pre-submitted questions. As you can see, we've received a number of questions throughout today's presentation, and thank you to all investors for submitting their questions. If I just may, I might read out the following. As you are now growing at real pace with an exciting pipeline, how easy is it to attract and retain new talent to the Zinc Group?
It's not easy. It's getting better. I think we've demonstrated that. I put a talent slide in there to show the people who've joined this group. Everybody, I mean, we know the history of the group. It's not an easy sell. It wasn't an easy sell to me to get me to join. You've got to believe that this company is an excellent vehicle for content creating growth. You've got to believe the market is there. You've got to believe you can attract the right talent, and you've got to believe you can got the investment to do it. And I think we have all of those things. So we are attracting bigger talent year on year and better talent year on year, and that it's a people business. We've got to do the same. So not easy, will get easier, but we're making good progress.
Thank you. The next one reads as follows. Great to see the organic growth, but as you get bigger, what's your views on acquisitions to accelerate the growth of the company?
We need to do some. That's at the right time. We have the means to do them. So we've got options, but it needs to be the right sort of thing. So the right sort of things that's easy to say, isn't it? Let me give you a sense. What's the right sort of thing? I would say something that accelerates businesses we have a foothold in at the moment, where we have perhaps invested organically and we see accelerating growth, but we really want to double down. That would be an area. That could be in TV or Zinc Communicate. Equally, areas which, if we invested organically, would either take a lot of time or come with arguably too much risk. So an acquisition would help there. So if we wanted to go into sport or drama or entertainment, perhaps an acquisition is the way to properly accelerate into a new space rather than organically. There's plenty of places we can do organically within our core. I would think those two criteria are on my mind when it comes to it, but it's got to be right, and we have options about how we do it.
That's perfect, thank you. The next one reads as follows: what effect does inflation have on zinc?
Well, do you want to try it?
Yeah. So, I mean, I think the good thing is that, I mean, it has some impact, but a lot of the inflationary costs that we're seeing, whether it is related to our overheads, which are predominantly staff, exec producers, editors, back office staff, or cost of sale, which are a lot of kind of freelance costs or similar kind of costs externally. A lot of those get passed on to the customer. So when we're agreeing a budget with a broadcaster for each of those roles, whether it relates to someone that we employ internally or we go and find as an external freelancer, the broadcaster has a set rate in those budgets, and inflation will be reflected in that. So in essence, a lot of those costs are passed on to our customers.
Thank you. The next one reads as follows: what do you see as the greatest risk to execution of your pipeline?
Greatest risk. Well, I think ultimately it's the decision of the broadcasters. So the risk is that something changes in the landscape, macro level risk to any of our buyers. Change of ownership presents risk. We talked about that. It presents more opportunity, I think. Speed of conversion is always the challenge. We've got enough business. Speed of conversion has been dominated mostly by the market, but the new businesses are in faster decision-making markets. So Zinc Communicate, the pipeline conversion can be very fast. I mean, it can arrive as a prospect in 1 week and convert within a month. In certain channels, the speed of conversion it varies. So Channel 5 are typically a much faster commissioning organisation, so you want to have a degree of your portfolio with them. Channel 4 are typically the slowest, and the international markets are really very hard to predict at the moment for reasons I've said. So those are some of the issues we wrestle with the pipeline in terms of managing the risk and the opportunity.
Thank you very much. The next one reads as follows: what's the normal timeline in converting business in the pipeline?
Oh, I think I might have answered that. It varies by broadcaster and by market. So short in Zinc Communicate, shortest in television in Channel 5, longest in Channel 4, and size of the commission does make a difference. So a very large multi-million pound international commission, typically where there can be multiple funders, that can be, those projects can be 9 months to a year. They can be 9 months to 18 months in some cases. Factual tends to be a bit quicker than drama. Drama's years, often, 1 or 2 years. So factual is quicker than drama, and it varies by client and it varies by market. So that's why diversification has been our watchword for the first 3 years, and scale is now our watchword for the next.
Mark, Will, I think you've addressed all those questions you can for investors today. And of course, the company will review all questions submitted today and publish these responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to the company, please could I ask for a few closing comments to wrap up with. Thank you.
I would like to invite investors to come meet us if you haven't already. So anytime, get in contact with me and come to one of our capital markets days. That's That's one thing I wanted to land with everybody. And feedback is important. I mean, it's a partnership between us, our staff, our investors, and our clients. In terms of summary points, I mean, I would pull us back to what do we think the year ahead is, and I think it's growth, it's revenue growth, it's more diversification, it's double-digit growth in Zinc Communicate, it's new hires, and it's scale. And if I haven't said it again, it's scale. So there's what's on our mind as we go into the year ahead. It's a big opportunity for us.
Mark, Will, thank you very much for updating investors today. Can I please ask investors not to close this session, as you now be automatically redirected for the opportunity to provide your feedback in order that the management team could better understand your views and expectations. It will only take a few minutes to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Zinc Media Group PLC, we'd like to thank you for attending today's presentation, and good morning to you all.
Thanks all.
Thank you.